The Opendoor CEO is changing everything, and I believe that this is the perfect example of billionaires Peter Lynch's turnaround company. What all of that means and where I see Opendoor going next, all about that now in this video.
Welcome to the game, I'm the wolf of Dubai.
If you're watching the very first time, my name is Danny. I'm looking for 10, 20, 30, 50x opportunities on the market. I was early on Tesla. I invested into $17 and then it went down to $6. Then it went up to 500 after the election. Then it went down again. And the rest is history. Okay. My subscribers bought houses and apartments in the US. So make sure to subscribe not only to this channel, which is the second channel, but also to the main channel where I talk about those companies. And if you want us to trade for you into your portfolio all automatically with our AutoPilot software that looks like that, just switch it on and we do all the rest, buying and selling without any approvals or anything like that. Like you just get all the trades all automatically. Then you should go to x10daytrading.com, schedule a call with me if you have $10,000 or more, and then we can see if we can help you as well. Now, if we are talking about Open, I think that the new CEO is absolutely brilliant. Okay. And what do? We look for every single piece of content out there and try to make a puzzle and see like what this company could look like. As you know, I was invested into Open and I want to be back at Open at around $5. I still, if you look into the seasonality of the stock market, by this chart that September and October are the most interesting volatile opportunities to buy stocks. And because it's such a hype stock, the volatility of Open can be quite crazy. And that's why I believe that maybe I have the chance. Maybe I will also, tell to myself I can buy at 6 or 7, let's see. Maybe I start at 7 and go down. Let's see if I have the chance. If not, I'm okay with what I've got here. But I think that Opendoor is a fantastic opportunity. Let's dive into the first clip of the new CEO talking about, and after that, I will tell you what I think.
Now, I wanted to start with the question, you left a great and huge business in Shopify. You must have the ultimate conviction that iBuying is a good business. Can I be so blunt as to ask what led that conviction when it's been a challenged conviction to have over the last few years?
Yeah. I mean, look, I never thought I would leave Shopify. I thought it was going to be like my job forever. And I just genuinely loved the company, loved Toby, loved what it stands for. But when I joined Shopify, everyone was like, what the hell are you doing? This is a tiny company. It's going to go nowhere. It was among the most shorted stock in the tech market. It was like very much like, this thing will fail. In fact, it was like a very lot. Like I think Citron wrote in a short report the day I joined Shopify about how terrible business it was and how it wouldn't last 2 years. But I think Shopify is a wonderful company. But look, I think the fundamental problem that Opendoor will solve is an incredibly important problem, not just as a business, but for the world. Like, if we can make buying, selling, and owning a home easier, less frictionful, less terrible, the world will be a better place. We will figure out how to make money along the way. This will be a great business. Like, we will make money. This will be a great business. But the problem space is a valuable one to explore. And I think you need to do it unapologetically. Like, the goal here isn't to minimize risk. We have a mission to go after. We'll go after it incredibly aggressively. And we're going to make it easier for both people who are buying and selling homes to engage in that transaction because it matters to the future of our society.
Can I be so bold and just ask, does that not feel like a bit of a boom time mindset? Oh, it's a valuable problem and we'll figure out how to make money along the way.
Fuck no. No, definitely not. Look, this is not, like, I'm not saying we're going to figure out how to make money along the way. We will make money. That's not what I'm saying. Like, we have plans on making, we will have plans to make money. We have some couple of good bets already. We'll launch more of them. I'm not saying I have a hope and a dream of profitability. This is a for-profit company. Like, it's very much a for-profit company. We'll figure it out. But what I'm saying is that businesses should not exist to make money. Businesses should make money to deliver on a mission. And those are important things. This is we are a mission-driven company and we'll make a profit such that we can deliver on our mission. And the shareholders will be happy. buyers will be happy and sellers will be happy. But that's the goal. Like, I'm not saying like, oh, I don't know how to make money. I know how to make money here. What I'm saying is the mission is more important than the money.
A wildly successful software executive, how do you deal with like this meme stock element to the company? Like, I'm not a meme stock guy. I don't trade. Yeah. I'm long in everything. This isn't GameStop, but it's crazy. This meme-ishness pre-you is crazy, isn't it?
Yeah, look, I'm not a trader. I owned literally one ticker. When I was at Shopify, it was Shopify. I expect I will own 2 tickers for like the next little while. Shopify and Open. Like, I'm not a diversified trader guy. That's not what I do. That's not my job. My job is to build great products and get people to pay for them. Let's back up. The second thing is I actually fundamentally reject the premise. Like, Opendoor is priced in the public market for its potential. And it's an incredibly fair price for the potential. And I think we will earn that right to actually, like, we will earn the potential. We're going to execute against the potential. That's not that different on how startups are valued by VCs. You don't value the current cash flow of a company. You value the potential and say, what are the odds it will get there? Right? That's what you do. You say, what's the discounted cash flow odds of this thing being big? And I think if you do it that way, this is the single largest market in the world, right? I think Tesla was not above 10% in any market it was selling cars in. It made until last year. It is above 10% in some markets this year. Opendoor was above 10% in many markets it was selling homes in couple years ago.
I really love his passion, okay? Like, he shows us like how passionate he is and was in Shopify, and now he's taking this to the open army, okay? Now, when we look into what he already changed in a very short term, his name is Nejatian. Okay, I hope I got this really. Anyway, so what he actually shows you that from day one, and this is like the beauty about a great kind of operator. This really reminds me of Tim Cook. Tim Cook, when he became COO, which was actually Ness in Shopify, Tim Cook did totally turn around Apple by going into China producing there, okay? The profits went up, the opportunity of quantity went way up, and, he made sure that Apple could scale tremendously. So I think Ness is a candidate like that, and, he like kind of changes everything, okay? Here's a couple of things, okay? So first of all, he said they are launching everywhere, okay? He said like, we must be everywhere, okay? So that's one thing, which is also very important. Second thing, he works extremely hard, okay? Like, look at this. As I left home on Sunday to come to the Opendoor office, I told my wife, sweetheart, I will be back home Wednesday or Thursday. Without missing a beat, she responded, do not come back until there is a plan to break even. Marry up, folks, marry up. This is beautiful. Like his household is already set up for success, okay? This is whom you want as CEO, that sleeps in the office, that, goes all in. And this is, one of the most important things for turnaround companies. We will talk about what Peter Lynch actually says about, kind of turnaround companies, because this is extremely important to understand that those companies, once the market catches up that there's something going, the stock exploding, okay? It goes from $5 or $6 or $9 to 20, 25, 50, 100, and so on, okay? So big opportunity here. Now, he also is one guy that really, really benefit from the meme and, let's say, cult of a stock, okay? So he says, this morning we filled an 8K, which is kind of like an announcement to the SEC that they will talk to investors directly, and they fire their PR companies, okay? They said like, you know what? We want to love to speak directly to our people, to our investors, to our open army. I mean, this thing is absolutely brilliant, okay? So then he opens up for customers to actually share with him their experience. He says, if you've been to an Opendoor house as a buyer and didn't have an excellent viewing experience, please tell us. Which is, I mean, this is how you lead a company, okay, guys? This is like, he's insane. Like, even he says like, bug request, send me all the bugs that you are seeing in Opendoor, please DM send me, like, this is the CEO, okay? And he says, so, send me the bugs that you find. And then he has a team that looks into it. I mean, like, I can scroll up and up and up and up. And, I just see more and more of this brilliant kind of things that he is changing. Guys, this can be huge. And I want to show you why I said in the beginning about Peter Lynch. Peter Lynch is one of the most amazing investors out there that turned 13 million into $18 billion. Okay. And look what he says about turnaround companies.
Turnarounds. These are stocks that are battered down, or they're hated companies, or they've been forgotten about. They're depressed in price. But you have determined some one thing or a few things that have the potential for reversing this company's fortunes, independent of the industry getting better or the economy getting better. You always have to do a balance sheet check on any company. This includes turnarounds. Do they have enough cash to make it through the next 12 months, the next 24 months? Do they have a lot of debt that's due right now? These are important questions to answer. Make sure you understand and believe in the plan to restore corporate profits. It's all internal. They're doing something, either new product, new management, cutting costs, getting rid of something inside the company that allows them to improve themselves. Lots of turnarounds never happen, but a few winners can make up for lots of losers. What's important is to wait for the actual evidence of the turnaround occurring, not just the symptoms. The turnaround, you had plenty of time. So just don't buy on the hope. Wait for the reality. Turnarounds are so big, it's worth waiting to get some real evidence. SS Kresge was a company going nowhere, in real trouble. They invented the Kmart formula. They rolled it out across the country. The stock went up over 50-fold. Kmart became a massive stock.
Now you might wonder, well, I'm holding open already since, let's say, 52 cents. And now it's at $10. When you should sell? Well, I have another clip for you that is actually also from Peter Lynch that I want to show you. But before we diving into that, make sure to check out x10daytrading.com, where we are trading for you with our software, the AutoPilot. We trade, things like Tesla, Oracle, or Coinbase. As you can see, amazing trades last week and even better trades this week. So make sure if you have $10,000 or more and you want us to trade for you, then check it out right now, because my time is limited. I have only a couple of spaces that I can, because every call that I do personally with my members. And also let me know in the comments, since when you are watching me, are you more a BitMine fan or an Opendoor? Do you own both? Let me know in the comments. And I want to show you a fantastic clip of Peter Lynch that says when you actually should sell. Okay, because I'm still in the process of buying, and I hold it for a couple of heartbeats, but I want to have my money more into BitMine for now, and then I'm waiting for Opendoor because it's still in the process. So now you have all the hype, then you will have for sure like a drawdown, and then the explosive move higher can even be much more bigger. Okay, so with that said, let's dive into the clip of Peter Lynch.
When you were actively managing money, you presumably were under the same pressures as other fund managers to show performance results. Right. Did that incline you to sell too quickly sometimes?
Well, I think my greatest mistakes are, it's funny, in a stock, all you can lose is 100%. I've done that. But your great mistakes is selling a good company, and then it doubles, then it triples and quadruples, because you make a lot of mistakes. And so those ones that go up tenfold, I call them the 10 baggers. So some of my mistakes are just saying, oh my God, this stock is too high. And I was wrong. And you had to figure out, what inning am I in this baseball game? I sold Toys R Us way too early. It went up 20-fold after I sold. I did the same thing at Home Depot. Those are probably my two greatest mistakes I ever made.
When should you sell?
Well, you ought to find out why you bought a stock. If you're saying if it's a cyclical company and they're doing poorly and they're doing awful, you wait till things are getting better, and they're doing terrific, and then you sell it. But with a growth company, you have to say, Walmart's case, 10 years after they went public, you could have bought the stock and made 500 times your money. Because they still are only in 15% of the United States. And they could say, why can't they go to 17? Why can't they go to 19? Why can't they go to 23? So for the next 4 decades, they went around the country. So you have to say to yourself, in this stock, I have a 10-year story, a 20-year story. You ought to be able to write that down and follow that. That's what I do with the company. And that's your decision. That's how you sell it.
We have a novel element from many investors today in the trust issue.
Yes.
We also have security problems that we didn't traditionally have in America. Have they changed the way you pick and believe in stocks?
No, you still buy a company, and you buy a company to grow. And if it's a textile company or it's an electronics company or software company, you better understand what they do. And if they do well, the stock will do well, no matter what happens to the market. If the Dow Jones today was 1,000 or 500, you would have made a lot of money in McDonald's. You would have made a lot of money in Johnson & Johnson. You would have made a lot of money in Gillette. These companies' earnings have gone up a lot the last 30 years. And if the market was 50,000, you would have lost money in Burlington Industries. I recommended that in 1969. I think it's gone from 34 to 2 with no stock splits because their earnings have been terrible.
Well, your modesty actually makes an important point. which is people with the best batting averages in the world don't bat 1,000. I sometimes get angry mail, particularly during bear markets, saying so-and-so recommended such and such and it went down. Well, how often did you come up with a clinker?
Well, this is a funny business. You don't have to be right even 5 times out of 10. If the times you're right, you make a double and triple, it offsets all those times you lose 20 or 30%. So when you buy a stock, you got to say to yourself, how much can I lose and how much can I make? And you ought to be able to make a lot. Stocks are risky. I mean, look at how much we lost in AT&T. Look at how much we lost in Xerox. These were quality companies. You can lose a lot in a stock. You got to say to yourself, how much can I make? Because I want to buy a stock, if I'm right, I'm going to make a double or triple.
Does your own confidence ever get shaken?
Every day I think the market's going to go up. I keep calling a lot my company, so I keep calling the company.
So as you can see, he says that, it's most important to have a plan. What is your plan? Are you waiting that, you just had the initial pump and you sell now for a 10x? Or you waiting, for example, that the full thesis will develop and Nes will definitely turn around the company and we will have break even and we have profitability and so on and so forth, because then we know what happened. We reached the $82 mark, then the 100, then the 500. And so everything is possible on the market, specifically with such a name like Opendoor. So this is quite interesting. Let me know what you are doing with Open Stock and the Open Army. And make sure to tune in tomorrow for a brand new vlog. And remember, the grass is greener always on the other side. Let me know in the comments what you think and check out x10daytrading.com.